and becomes an inversion fair value gap. Now, instead of acting as support, it's more likely to hold as resistance and create opportunities to go short. That's why highlighting inversion fair value gaps on your chart gives you valuable clues about where price is heading and what's likely to happen next. Next up, we have the order blocks. Let's check the box and see how they are applied to the chart. Now, we can see multiple order blocks displayed. From observation, it appears the indicator marks the last bearish candlestick before a bullish impulsive move as an order block, and similarly, the last bullish candlestick before a bearish impulsive move. However, with this definition, many potential order blocks are filtered out and not marked on the chart. These marked zones are considered our POIs, points of interest, specific price zones on a chart where market reactions are likely to occur. So, essentially, when the price returns to these order blocks, we expect a possible rejection and look to open a trade. The indicator uses a unique method to identify these order blocks, showing only those confirmed by market structure and trading volume. However, determining their win rate would require extensive backtesting. Additionally, we must look for the entry reason and confirmation in the lower time frames. Now let's put all of these concepts together by breaking down one of smart money's most effective strategies, the inversion fair value gap in fair value gap. To apply this strategy correctly, you'll need to work with two time frames. First, use a higher time frame to analyze market structure. Here, you'll look for a change of character and the fair value gap connected to it. Then, zoom into a lower time frame to spot reversal and confirmation signals. This is where you'll look for inversion fair value gaps and identify your entry point. Now let's go step by step and see exactly how this plays out. The very first step is to analyze market structure on the higher time frame and determine whether price is in a strong uptrend or downtrend. To confirm a strong uptrend, you need to see at least 3 consecutive bullish BOSs. On the other hand, to confirm a strong downtrend, price must form 3 consecutive bearish BOSs. Once you've identified that, the next thing to look for is a higher time frame change of character. For example, in a bullish scenario, if price breaks and closes above the most recent BOS's high of a strong downtrend, it signals a bullish change of character, suggesting that sellers are losing control and the market is likely to shift direction. Now, once a market structure shift is confirmed and we expect the price to move higher, the next step is to look for a buying opportunity. At this stage, we focus on spotting a bullish fair value gap that forms within the change of character's leg. As we mentioned earlier, FVGs often act like magnets, pulling price back in before it continues upward. So, after identifying the higher time frame CHOCH and its fair value gap, the next step is to zoom into the lower time frame and wait for the price to return to that higher time frame fair value gap. Then, closely monitor price action inside the fair value gap and look for any sign of rejection. This confirms that price is respecting the higher time frame gap, and that's your first layer of confirmation. Once you have that, the next step is to look for a violated fair value gap that flips into an inversion fair value gap, either inside the higher time frame FVG or just outside it after the rejection. This becomes your second layer of confirmation. When this inversion fair value gap forms, it often acts as a new support zone, and that's the area where you look to open your position. If a market structure shift also occurs at the same time, that adds another powerful layer of confluence, making the setup even stronger. This market structure shift tells us that the temporary bearish move is ending and bullish momentum is likely returning. At this point, price is expected to realign with the higher time frame trend, which is now bullish. With all these confirmations in place, we can now expect that price will return to the zone of the inversion fair value gap, which now acts as a support, before continuing upward. Next, to open a trade, place a buy limit order at the midpoint of the newly formed inversion fair value gap. Your target should be the nearest buy-side liquidity on the current time frame, or if you're aiming for a bigger move, a key level on the higher time frame. As mentioned before, this strategy works with 2 time frames. I usually combine the 1 hour with the 5-minute for this setup, but you can also use the 4 hour with the 15-minute, or even the 15-minute with